the fact that we have the 130 psychological whole number, right, mixed in with the cluster of high volume activity, now this is basically bringing this pair to my attention now, and I want to see what price is going to do after that. So when it comes to trading, there are many different ways you can approach the market from a technical analysis point of view. But the most important thing is that you are consistent in the way that you carry out your analysis, right? So if you have a set of rules that basically makes up for your strategy, you have to make sure that whenever it comes to the market, you are following those set of rules and you don't bend those rules whenever you feel like it, in order for you to have a consistent result when it comes to trading. So for me, this was the case last week because I had two potential trading opportunities. One of them was on AUD USD, and basically one of my rules is price has to retrace at least a 38.2% before I start looking for buying or selling opportunities, right? So on AUD USD, there was a potential trade for me to go long. Price came really close, and by really close, I mean about half a pip to the 38.2% retracement level, but I didn't get involved in the trade, and price then went ahead and hit take profit. Now, rather than me breaking my rules and basically trying to chase the trade as soon as price started to go in my favor, I basically just held out because I know that there are more trading opportunities that will come, right? And that was the case on USD JPY. So I'm going to jump into the charts and show you the technical analysis that I had on USD JPY, and it played out in my favor. But one of the major things that I wanted to stress is that I wasn't, stuck on AUD USD. I moved on, and a few hours later, I was presented with an opportunity on USD JPY to basically make a profit, and I did, right? So without wasting any more time, let's quickly jump onto the technical analysis for USD JPY. I'll start on the higher time frame because it's not a long analysis, right? It's not a long breakdown. It's pretty straightforward. And then I'll take you to my entry to show you what I saw. So let's go up to the 4-hour time frame. And straight away, guys, it's very obvious that USD JPY has been in a downtrend. As you can see from here, where I've got my trend lines drawn, you can see a very steady, very obvious downtrend, right? But here's why I decided to go for a counter trend trade. So basically, as you can see, price came down all the way to the 130 psychological whole number, right? Now, I'm not just getting in because I see that price is at the psychological level. One thing I start to do is to look for unusual volume. Now, what this does for me, right, is it lets me know when big money are involved in the market, right? Because what I'm trying to do is I'm trying to trade in the shadows of the big money. I'm not trying to guess what they're doing, right? I'm just trying to find potential areas where these guys are interested in before I start taking action. And that is basically my strategy when it comes to the market. So how do I know when the big money or institutions are involved? Oh, I'm not looking for double bottoms, triple bottoms, and all these other things that other smart money concept traders look for. And this is no shade on smart money concept traders, right? But for me, right, logic tells me I need to look at volume. And yes, you've got a lot of people that say Forex doesn't have actual volume because it's a decentralized market, but volume activity is a form of volume, right? When there is high activity, when there's high unusual activity in the market, that means there is a lot of potential buying and selling going on in the market. And these guys could probably be the smart money traders, right? So this is why I look at volume analysis. So if we jump down to the 15-minute time frame, as soon as price came down to the 130 psychological whole number, here's what we had. Look at this. We had unusual amount of volume. So the purple volume is, and this is relative volume, right? So the purple shows that over a period of time, right, there's been high unusual amount of volume. So unlike this area here where you see one purple volume bar, high activity bar, what we have here is we've got 4 volume, ultra high volume activity going on. So already I'm looking at this like, okay, well, the fact that we have the 130 psychological whole number, right, mixed in with the cluster of high volume activity, now this is basically bringing this pair to my attention now, and I want to see what price is going to do after that. So immediately, when price came down to the 130 psychological whole number, we saw that buyers came into this market. So already, what I'm starting to think is, in order for price to go drastically against these selling activity that was happening here, right, it means that this selling activity is likely profit taken by large institutions, retail traders, anyone who's been selling prior to this level, right? They are most likely taking profits. And what we have now is an exchange, right? So we have an exchange from selling to buying because buyers came in and immediately took price. And where did price go? It broke the counter trend line that we've seen all the way from this level, right? So that is telling me that, okay, well, these buyers must be really strong, right? Because not only have they overtaken these sellers that were coming in, they've also broken this counter trend line, right? So what am I doing, guys? I'm looking for price to come back to this level on low volume, right? To show me that the selling has actually dried up. Because remember, it's still a downtrend and I'm not trying to go against the trend. What I'm trying to do is go with the trend, with the flow, right? So at this point, when I see all this selling coming down, look at the volume, guys. Very low activity selling compared to this area where we saw a lot of selling, right? The volume here was quite low when you compare it to this level here. So this is why when it comes down to volume spread analysis, we're looking at relative volume, right? We're looking at volume relative to the previous days. And that is literally what we had here. So we had low volume coming in to retest these aggressive buying that overtook this market. We've got some people who have refused to probably take profit at this level and they've probably kept on selling, right? So we've got some trapped sellers over here. We've got some profit taking happening from previous sellers. And then we've got buyers coming in and taking over this market. So during Asia session, which I don't trade, right? Because you get a lot of fake outs from Asia session. This is why I wait for London session when there is actual volume going in to show me what the intentions of traders are really looking like, right? To show me the real sentiment. So, okay, we had this harmonic cipher completion to the upside. That was another confluence, right? So Asian session, you can see we pushed because these sellers were not keen on taking price lower, right? And you can see it's like we had another wave of profit taking on this high volume selling right here, because you can see the candle closed higher to the, or closer to the middle of the whole bar, right? So we had some profit taking. Buyers came in Asian session, pushed the market higher, and then during London session, we came back one more time. Now, this is where I was looking for entries. This is where I was looking for buys. And as price came in, you can see, right? If you trade candlestick patterns, you can see that this is a kangaroo tail or pin bar, whatever you want to call it, right? And which signals strength in the market. But because I use volume spread analysis, let me show you what this really was, because this was a shakeout. So if we jump onto the VSA chart, you can see right here, we had a shakeout, right? And I've read this on several of my previous videos, but just in case if you're new, I'll read it again. So a shakeout is a markdown on a widespread closing up near the high to shake out weak holders, right? If volume is low, then supply is dried up. High volume suggests demand overcame the supply, right? And that is literally what we had, because we had high volume selling into this market, right? High sellers, but look at where price closed. Price closed near the highs of this candle, which once again means that demand has overcome this amount of selling supply that we had coming in to this zone that I've highlighted, right? So now, as soon as I see that buyers came in, right? So after the shakeout, you can see aggressive buying from the candles coming in. And that is where I basically decided to jump into this market, because if we look at the number of confluences, we have the bullish harmonic pattern, we had a double bottom, right? We had a shakeout, we had the 61.8 retracement of this bullish move all the way up here. We had a counter trend line break. So guys, at this point, for me, I know that this market, well, I don't know for sure, but I have a high probability that this market is going to continue to the upside. And that is literally what we had. So you can see sellers attempted one more time, but we've already established that the volume was quite low as price came down into this level. And that's why I knew this area was going to hold. And I just put my stop loss below the shakeout, and price immediately moved in our direction. Now, let me give you guys a bonus tips, right? Just to show you that volume activity is actually essential. So if you look, when we come over here, right, you can see we had high volume activity clusters right around this level. So what I'll do is I'll take the fixed range volume profile, right? And what we can do is we can draw up right here, and you can see that the most amount of volume activity was around this price level right here, right? So what I'll do is I'll mark up this level like so. And then what I'll do is I'll also mark up the high of this level, because I'll show you what happened as price approached this range, right? So remember, this is the range where we had high volume activity, right? So look at what happened. This is why, once again, I have an idea, right, of where I believe market is going to go. And that's typically the 0.27 Fibonacci extension level, right? And you can see that that's where we got to. But prior to that, what I want you to look at is, look at this volume cluster activity right here, right? Remember, we marked up that price level where that had the most high volume activity, and look at where price had its biggest retracement from this move up, right on that level. And that is where I took profit, right? So you can see I took out my profit for a 2-to-1 risk reward. And that is literally around this level, because I knew we were going to find some resistance at this level, which we did, but then price proceeded to break above this level. Now, remember the top of the range of that level? You can see we had more activity going on because price was hesitant to move above this level, but then eventually price proceeded. So we had a triple bottom right around that, the top range of the high volume activity when we look left, and price proceeded to push up. So that is this trade, guys. And I hope you can see how effective using volume activity is to your trading, right? When you trade price action using time and using price, yes, that is a good enough data. However, when you implement volume activity, right, and volume spread analysis, what you're doing now is you're looking at the market from a three-dimensional point of view, right? So you're using all the data that is accessible to you to trade these markets. So why not implement volume analysis, right? So this is basically the way I trade, guys. But also I wanted to emphasize that you don't have to chase trades, right? So if you, going back to our AUD USD trade, I missed that trade setup just because price did not fit my rules, and it was almost my rule, right? the fact of the matter is, it's not completely my setup. So I'm not rushing into the trade thinking, oh my God, I've missed the trade. This is the last trade that's the market is going to present me with. What am I going to do? No, I simply calm down, yeah, remain patient and wait for the next opportunity to come by, because for all you know, fair enough, that trade played out. What if it didn't? What if the trade did not play out in my favor? I got in chasing the trade. I took a bigger loss than what I was supposed to, and now I'm mad at the market. I'm mad at myself because I didn't follow my rules, right? So remain patient, remain consistent, because one thing about trading is this is one of the very few markets where you're presented with an investment opportunity almost every day, right? And you get to find out whether you're right or wrong very quickly. Right? There's no other market that presents you with these kind of opportunities every day, regardless of what market you're trading. Trading is a very profitable market, right? But you should not rush the process. Develop your set of rules, develop an edge on the market, and stick to those rules in order for you to get consistent, profitable trades and eliminate any emotional attachment you can have to any trades. So that's it for this video, guys. I hope you've taken away a lot of knowledge. Do me a favor, guys. Hit that thumbs up button, hit that subscribe button, and be sure to smash that notification bell so that you are made aware every time a new video drops. I'll see you guys on the next one, guys. Take care.